Founder Jeffrey Gundlach.
Do you think the euro at some point collapses? I mean, there was all this skepticism going into the creation of the euro.
No.
Now we see Brexit. Now we see Catalonia.
Well, the euro's been going up through all of this. Actually, the euro's at something of a local high. It was up at 120 a couple of weeks ago. But
and the dollar's had a horrible year as a result.
And that's been the worst trade of the year for most investors because the #1 recommendation from so many strategists was highest conviction trade for 2017 is long the dollar. We didn't fall into that trap at all at DoubleLine because we realized that it's not short-term Fed expectations that drive the dollar. People think it is. But what drives the dollar is longer-term Fed expectations and expectations for the Fed raising rates along with their plan. The bond market isn't buying it. They're buying December of this year, but they're not buying the 2019 concept that the Fed has and the 2018 concept. The bond market thinks it's only a 50-50 shot. You get one hike in 2018. So we're getting back to that point where the longer-term outlook of the Fed is being disbelieved. What the dots that they publish is being disbelieved by the bond market. And that means that the probabilities, market-based probabilities of the Fed tightening a lot have come down. That's why the dollar's down.
Yeah.
So you would need the bond market to decide that the Fed is right. And so far, they aren't buying into it.
Well, we had a little bit of a creeping back. I mean, this last 2 weeks on the dollar. Do you think it's sustainable? Or?
It was really oversold. The dollar, in the month of August, the dollar had a year-to-date return that was the most negative of the last 20 years of any of them. That basically suggests that it was very oversold. And you had gone from the highest conviction trade was long the dollar to tremendous speculative positioning against the dollar in August. So a counter trend rally was due. We actually are participating in that in some of our funds where we decided we'd pare back on our dollar holdings. But I don't think it's going to continue to rally. I think it'll go maybe up to 96. The dollar index is DXY. It went down to around 90, and it's having trouble breaking above 94. We think maybe it makes it to 96, but the longer-term trend is down. I think I'm just more inclined to buy into and believe market-based probabilities than I am PhD economists at the Fed probabilities, because I've seen the market be right an awful lot more than wrong on this, which means that the Fed may, after doing this systematic tightening that they're in, they may have to observe weaker data and maybe they'll have to drop their dots.
Well, it's interesting to hear you say longer term the dollar is going to be, down when you have a guy in the White House who's all about America and getting growth numbers up. So, President Trump is talking about 4 or 5% economic growth.
It's not going to happen.
Okay.
You just can't. You've got to put the math together. I mean, what's the population growth? Well, labor force growth is about 1% less than it used to be because of demographics. So right away, it's difficult to get back to old school growth. And so you kind of look at productivity, which has been depressed at around 1% or so, and you look at labor force growth. I think a high economic growth number is 3% in our world today. Real growth is 3%. But we've been at 2%. For the last, how many years now? 6 years?